I think we're live. I'm 53. Okay. So, first finally got my upgraded internet. So, I should not be like crapping out. Oh my gosh, excellent health and fast speed. And um I think before it was I think before we were doing in like 1080p, which since before I had an issue, I probably should have just lowered it. Um but now we are in, what is it, 1440. So hopefully this is working. So if you guys can hear some audio, that'd be good to know. And hopefully stream is working fine, actually. And what do we have for low latency? Cool. See if anything's working. Want to double check. Maybe wait for somebody to pop in here. I know yesterday I was like planning on not doing anything, like towards the end of yesterday's stream, but I got my new gateway, so I have to at least test it out, even if this is a 5-minute stream. And actually just pretty much like reconfigured everything, so hopefully this all works. Oh, I need to reset it. There we go. Okay, cool. Blue. All right. Actually, I just opened the stream on my phone. Cool. Okay, so actually, I think I went over a lot of stuff for the week yesterday, but I didn't. I didn't get to, holy. Oh, let me get this going too. Where is that? Sorry, everything's a little bit disorganized. But what I'm gonna do, just until I have any questions, or even if I do, because I know I said I wasn't gonna do this today. I want to put in closing orders for most of the things that I said I was going to. Might as well take some time and do that. My total return. Oh, and I guess the latency is a little bit higher than usual too. Just because like when you stream 1080, it allows you to do ultra low latency, but in this case not. Oh no, I need to change this. Wait, everything's working so much quicker. All right, so getting to closing some of these guys. So we're gonna sell 4 shares. What was our average cost? We don't really want to lose much money. Yeah, totally. Ask away. I did a live stream yesterday, so I think a lot of people are not maybe showing up today. But yeah, that's exactly why I do these. Just so you can ask whatever you need to, and then get good back and forth, since you know, it's a little hard for me to type out a lot of this stuff during the just typing just typing away on my phone. But yeah. And what do we do? Oh, there we go. Limit order. Good for day. Good till canceled. And we'll sell that. I don't really care if this goes to my break-even price. Actually, it sucks because it was above there, but I wanted to wait till I did this beforehand. 170. 73. We'll take a little bit of a profit for theirs. Sure. Okay, I'm new to stocks and trading. What are some good books to start learning? Depends what you want to do. So that's a really good question, and that has totally changed for me kind of over time. If you're looking for straight up like investing, there's a whole myriad of them, like Peter Lynch, and unless you're super into books, I think a lot of the audiobooks that are available online, anything like by Peter Lynch, there's a whole myriad of them that's just really about investing. I think a lot of it has changed over the course of the last couple of years. Like the market has changed with the addition of crypto, with the addition of millions and millions of retail traders, and then meme stocks. Like, so those things you're not going to find in the old books. Those old books, though, you can get a lot of good nuggets out of those, and I enjoyed them, but a lot of them don't really pertain to what I do specifically with options. Most of those books and the information in there is just going to be about like strictly investing. So, what? Also, do I have any tips to prevent constipation? Yeah, fiber, man. Eat your vegetables. Listen to your mom. Like, that's it. Poo-poo's not coming out. Let's see. Did we get that? Okay. We're selling these. Good thing that didn't show. Massive amounts of vegetables. And Nintendo. But if you're like really wanting to get started like with options, I mean, there's a bunch of YouTube videos. I found that real easy for me. If you want to get dive deeper into it, like there's some really solid ones. Listening to Tasty Works, Tasty Trades, they're super solid. And but it'll take a little while for things to kind of click with you. It's learning a whole new language. What's up, Steven? Going to a pumpkin patch? I know that's coming up. Like when I was out and about yesterday, I was noticing like people are getting all their decorations up. I'm kind of glad. Well, that's right. You got little kids though. You have to do it. I don't. So I don't do any of the decoration stuff anymore. Nintendo. What do I want to sell some Nintendo at? Good Lord. Maybe when it hits $60. How about that? Shares. How many shares do we have? We have this many shares. Just got off work, picked up the kids and wife. Awesome. Oh, my girlfriend's just at work, so here we are Saturday, and it looks like the stream is working. I had to redid everything. New, I finally have a new gateway or whatever. It's like 5G instead of 4G or something. It's all wireless here. So I wasn't sure if that was going to work. So I think I'm streaming in 1040 or whatever, 1440 instead of 1080 now that we actually have enough. And it keeps saying excellent condition or excellent connection, where my old router thing, it would like throw up warnings all the time. Let's see, limit order. Oh, no, I want 5. I want all these guys. And then cleaned up my OBS. So why can't I can't sell a fractional share? That's silly. Looks good. Can you see like a different? I mean, not that it matters for I guess this. I'm not sure if it matters or if you can even tell. Um. Oh, that sucks. Oh, sell all. You're placing. Okay. Perfect. I don't care when this executes. Yeah, it's clear. Nice. I was thinking I was thinking about trying it in 4K too, but I know I think that's a little bit more bandwidth. I'll try it next time. See if anything like doesn't work well. And then I'll probably have to get a new camera because like my camera is just like a 720, yeah, 720p. But it's just whatever old crappy one I had at the time. Why can't I do this? Why won't it let me? Oh well. Okay, fine. So whatever. I'm selling all my shares, Steven. Stuff I don't care about. Q Spy, I'll keep those. Hawaiian Airlines, I think I already got a call credit spread on, or a call, covered calls on those. I think I have it on almost everything. Oh, and closing out some positions too. I need to close out my Dropbox. Well, those will expire next week. And DraftKings. So as soon as the calls I sold against them expire and two Apple calls, then we'll just close out all of our long call positions. We'll sell those. And I think that's it. That was easy. And then I just need to roll out things next week. So cool. And I've lost $1.11 today, so pretty rough. Mm, what else do we have close out? Okay. Yeah, I thought it was gonna be slow today, just since we streamed yesterday for I think an hour and a half, so we probably got it all out of the system yesterday. And I don't have any more thoughts than that. That was like talking through everything yesterday. I just really wanted to get everything cleaned up. So all the tons of positions you see here are all they're all gonna get consolidated pretty quickly. Oh, I do have crypto. um, I'm buying $3 a day in this account of Ethereum, Dogecoin, and Bitcoin. I was like, I want to scale in. I should have some in there. Where is it at? There we go. There's my big holdings in this account. Actually, we can change it to equity. 70, $80. So not a whole bunch, but I can put $9 in there a day. Oh, and by the way, Steven, I know you knew my girlfriend held a ton of Dogecoin, but she bought Shiba, like 3 4 weeks ago or five. I can't remember. No, actually, no, it was a few months ago. She bought that, so she's been happy over the last couple days where it actually skyrocketed. Yeah, I figured, well, $10, basically $10 a day over the course of a year, 3 grand, which isn't huge, but to have nothing in there, to have zero in there is pretty hard. Um, so might as well. And I already have like what I mine, and I have like leftovers. What I've leftovers from when I used to trade it, when I had a trading bot, like whatever it was, 5 6 years ago. Is Robinhood gonna list Shiba Inucoin? I don't know. I heard there's speculation about it. I haven't seen any news on it, but that's gonna help it. Cause like right now, she bought it on some app that I feel is pretty sketchy. Um, but she's got whatever 12, I don't know, whatever 12 million, 12 billion, no 12 billion, 125 billion Shiba Inus. She bought. I don't even know how much she paid for it because it's whatever 0.0000 whatever. And it's yeah, it went up. I know, I know it went up like at least 4x or 5x in the period. It seems like a few days, but for a while it just didn't do anything. I don't know. If it comes on Robinhood, maybe I'll get a little bit, but God, it's crazy. Like it's so crazy seeing Doge where it's at, which is pretty seems pretty worthless. And then if Shiba goes up, I'm like, I just don't know. You sold the Colin Hood at the $55 level. I sold mine at 43 and a half for next week. Robinhood was one. I know you bought it so you could sell premium on it. Um, but I bought it. Well, I had those. I bought it on IPO, sold it 60, and then when it dropped down to $40, I bought the rest of the shares, so I was at 100. And then I realized I own it because um, I own Robinhood because I use it and I want to own some stuff I use. But I already own a bunch of stuff I use, and I just want to use this account to make money. So I just sold it at 43.50. Um, my calls are gonna get toasted next week. That's fine. Excuse me. That's fine. I'm going to sell calls. Oh, maybe yeah. You probably missed it yesterday. I did a live stream at the end of the day just because I wanted to put together something and kind of shift what I'm doing a little bit. And part of that's going to be getting rid of every stock that I don't really, really, really want. And I don't mind owning Robinhood, but I don't love it. I don't know that it has the potential to 3x, 4x. I don't really know. Um, so I don't know. I can and I can use that same collateral, right? I can use that for whatever it is, 4,000 to okay. I can use $4,000. Is that what I have into it? Yeah, like 4 grand. I can go sell 8 put credit spreads with the same collateral. So I'm happy with that. And I know that'll take if I'm receiving 20%, that's whatever, 5 months and I've doubled my money. I don't think Robinhood's gonna do it. I'm not gonna cry about it. Maybe 10 years from now, 3x. Yeah, I just feel like I can do a lot more. And maybe like I don't know what the outlook is. Is this like is everybody that's on Robinhood? I think well, a few different things. I mean, obviously we got a huge influx of retail traders from pandemic because we had nothing else to do, like myself included. Um, and probably like a good portion of the people here got into it during that time because nobody was working. So, and then a lot of us needed to, or a lot of people needed to graduate to other big boy brokers. Like um, I have to trade in TD Ameritrade under my LLC because you can't do that on Robinhood. So I have something to have my write-offs against. Um, but I think a lot of people are just going to switch anyways. I don't know, but it's nice not having any fees on Robinhood. And then also, is this going to be like because since people started trading during the pandemic, and then you could like throw a dart at the dartboard, pick any stock, and then you're a stock picking genius, and be like, buy this stock, it's gonna 10x. Kathy Woods just bought it. You need to buy it too. Goes up 3, 4 times, gets pumped, dumped, and then so now do we enter like a sideways market, down market, and everybody gets turned off and they're kind of done with it. I mean that very well could happen too. So I don't know if it's just gonna keep going up and up. And I don't even know where their value like I don't even does it show what's their P ratio? I don't even know. I don't even know if they earn money actually. So I don't know enough to want to own it. And I certainly don't I certainly would not want to like or care to own it over something like Palantir. I'd rather sell this and buy 150 more shares of Palantir and hold that for the next 3, 4, 5, 10 years, or what, or buy a couple shares of Tesla, something like that. Remember my name. It is going to rocket next week. Yes, you were. Yeah, and it like yeah when you called it the Tesla 740s, and then whatchamacallit got in the way. It was Nitsa that screwed you, I think, right? But it eventually happened. It eventually happened. If we have a huge downtrend, Robinhood, a lot of traders will lose money and quit. Yeah, I think even a sideways one. I actually, it was funny. Yesterday I was driving, and I was listening to like on my channel. It says this is like what other people um, this is what other people listen to. And then so I clicked on a few of those channels. Some of them I'd never heard before, but I was surprised to see kind of that same thing that was being done a year ago, where it was like, just buy this stock. Like that's all it was. I can't remember. The guy had like a lot of subscribers, like 400,000 subscribers, and literally he's just kind of like all his videos were like buy. I can't remember, like it was either like blink charging or one of them that I totally disagree with, where I'm just like, no, don't buy that. But it looks like video after video is just buy blink charging or charge point, or I think it was charge point. Is that the one that's it was like at 18 or $19? Yeah. Yeah, $18. That's the one he was calling out. And I'm just like, ooh, I don't know. Baba, yeah. Oh yeah, and I did watch that TG guy too, but I watched him a couple days ago um after Steven said like that guy was all in on Alibaba, like super all in. I hope it's a real bounce. Um God, I really hope so for that kid. He's like super young and lost what is it, like 60,000 on Alibaba, or 70,000 or something like that. And he loves the fundamentals, and I won't argue the fundamentals on Alibaba, and the numbers are super good. It's just whether or not China tells us the real numbers and all their other underlying problems that they have, which that's the only reason Alibaba isn't $300 right now. That's if that company was in the United States or Europe or anywhere else, that company would be worth $300, like no question. Yeah, TG. Yeah, he must have made a ton over the last couple days. I hope, but he said he got like margin called and stuff. Uh, yeah, TG investing. Yep. Bob, on the other hand, has been bad but decent recently. Yeah, I hope this is another bounce. I don't see it going too far up. It's like the memory of the market is so short. It just says like short term memory loss. We forget that China is having like, I mean, they don't have power half the places. They're still like super sketch right now, and even though Evergrande may be saved today, I don't know. Who knows down the road what's going to happen. But um, something else, kind of along the lines of China. I watched this guy that he's actually from South Africa, and he lived in China for years and years. He did and he lived there, taught there, and then him and his buddy rode motorcycles through the whole country and kind of recorded videos and stuff, and showed what's going on. It's insane. It's like the properties that Evergrande were building. Some of them were fake, like cardboard, styrofoam with paint, like fake. like unbelievable. So that's what like that's where their capital went, and people didn't live in them. They were just like, this is what you need to do in order to gain wealth in China, was put it in the real estate market, and it was going up and up, and basically that popped. But a lot of the properties are just garbage. And then it also tied into, it was crazy because I was listening to Biden talk about his build back better plan, and he's like, well, China puts more money into their infrastructure than the U.S. And then you go look at their infrastructure, you look at their roads that they build and then they fall down, and then they build and then they fall down. And we don't get to see a lot of it or hear a lot of it, just because if you're inside China, you're definitely not going to want to say that to anybody, because you don't want the CCP coming down on you. And if you're outside, like this guy, he talks about getting death threats and all sorts of crazy stuff. Build build a bear better. Build back a better bear. Yeah. Build a bear workshop. But it's like their infrastructure it's crappy, and they put so much effort into, and there's like signage all over. They put so much effort into putting out that facade that that's what we end up hearing. It's so crooked. It's so damn crooked. Oh. Um what's up first last? Why do credit spreads still show red even though not in the money? Because if they go down, it costs more to close them at that point. The only time where you'll 100% not be red is on expiration. So, but we can take a look at, let's go to options strat. That's the easiest way to see it. And let's build a bull put spread. Super easy. So, wait, this is, that is way huge of a spread, at least for me. Where's our chart? So it also depends on volatility too. So what are we looking at? November 5th. Oh, let's go something we'd actually do. There we go. So let's see. All right, have fun. Pick out a nice pumpkin. All right, so here's a put credit spread. Let's see, can we make that a little bit bigger? There we go. And so you're probably, wherever you're gonna open it, let's say you opened it up tomorrow, or I guess yesterday, like right at that 785. And our short strike price in this case would be 735. So, and this shows the relative value. So you could go down to 767 over the next couple days and you'd show negative 50. But as like, if it stayed at that same 760-ish level, you'll still show negative up until the last few days, or it goes back up. It's just, all it is the cost to close it. That's it. And if you look at the very last day, the actual the day it expires, you can see you could be negative 150 for that whole period of time. But if it does close actually above that short strike price, then you're 100% profitable. That's why it's never like, and unless like when you very first open it, so you can see like right at the very beginning, unless it's either dead even or goes up, you can be negative on it pretty quick. So being down a little bit isn't a big deal at all. I mean, even if it moves down half the distance too, I don't think that's a very big deal, because generally like it's going to go down and back up, or it usually goes up and back down, doesn't just fall off a cliff. Have you ever thought about getting more of one type of spread instead of being in like 80 different Tesla spreads? Yes. And actually I talked about that yesterday. I did a live stream and kind of because I've been kind of thinking about the same thing. And if we looked at let's see, do I still have it up? No, I don't. But someone had posted their portfolio or their plays in the Discord, and it was so clean. They had like 5 different ones, but 20 of each. So yes, I have thought about that, and that is my intention. Actually, my entire account looks ridiculous with the amount of stocks and um, the stocks and the options in there. Everything looks pretty ridiculous at the end of the day. So I 100%. Yes, I have thought about it. Yes, I'm going to do it, and yes, I'm going to clean it up. I don't know what I'm going to talk about at that point, like every day, because a lot of them is just honestly like I would make plays just because yeah, there's a few $1,000s. I should open up something, and nothing was really methodical or since I post something every day, just like another day of oh here we went up 3,000 down 3,000 and didn't do anything else, and then also since I pay attention to it all the time, I feel like oh I need to be doing something. So my plan is to basically like simplify it. Maybe I'll just make weekly or a couple week bi-weekly updates. I actually really like posting when I'm down or when the market's down though, just so other people can like if they're having a down day on their account and they're like, "Oh man, life sucks. I'm down so much money." And I'm down like if they're down 1,000 and I can post and show like, "Hey, today I'm down 15,000," and just having somebody kind of there with you, and we're all kind of hurting the same. I think that could be helpful for somebody, and that's the reason I really like posting on the down days, on the even days or up days. I mean, it's kind of like this chart. Like that's my expectation. It's a pretty, like we'll open them up here, and I expect Tesla's going to move somewhere in this range, and so I expect like the profit somewhere right around here, and that's just like what it's come to be. So not very exciting unless some event happens. That's just pretty exciting to me. So and then with that, just maybe making everything a little bit more methodical. I can take some time to try to figure out how I can either explain things better or just be more helpful or educational in general. This is getting pretty boring too. It's boring, it's repetitive, but it's been overall successful. So kind of weird balance there. You guys think Monday is going to be green? I don't know. What was this? I don't even know what the sell-off was at the end of Friday. I don't know what that was about. I was busy with other things. I think I was busy actually streaming at that last hour, so I don't know what that was about, or the that crazy after hours Robinhood sell-off. That was pretty nuts. So, yeah. I guess maybe it depends what kind of news we get in. I mean, it's still middle of Saturday. We have the rest of today, tomorrow. I didn't even look what did the SPY do after hours? Do I have SPY up? I think I'll make my guess is we will drop. I think we'll drop off the opening and then have a green day. That's my prediction based on not much. I wish I knew. In my opinion, you should think about running spreads on other things besides Tesla, like maybe getting an Amazon Iron Condors a few weeks out. Um, that's funny. I literally, that's what I have had been doing, and that's what I'm gonna probably stop doing. Which is, I know it's like a little bit opposite. Um, so I know that's what you're supposed to do, and if you just like watch my first the live stream I did yesterday, the first like 5 or 10 minutes, I really go through it. Um, but I want to break away a little bit from what you're supposed to do. You're supposed to be diversified. You're supposed to do this. The market, to me, even though there are some old traders, right? They've been trading for 20, 30 years, but the market isn't like relatively old. It's not like thousands of years old where there's concrete history with it. Um, so I think that's probably the correct thing to do. Like according to someone like Tom Sosnoff, he says like that according to their research that you're right. That's totally correct thing to do. But I don't know Amazon like I know Tesla, and that's why I have so much comfort. Like Amazon or Tesla could drop down to 700, and I could have several put credit spreads in the money, losing like very quickly, and I have way more comfort than that than I had when Roku. I have Roku. I have Google. When those dropped like $2 in the money, compared to a Tesla $50 in the money, I always know exactly. I know exactly what I want to do with the Tesla ones, and I had no idea what to expect out of the Roku, the Googles, or Amazon. Actually, I lost on my last Amazon play. I think I had 100% loss on that one. So I think it is like one of those just kind of cliche right things to do, but I'm not going to. And to put it also in context, I have other accounts that I trade in, and I have other accounts where I just have long-term holdings, and that's it. So, um, so like overall, I am a little bit diversified. I'm just going to get way less diversified, kind of stick to what's been working and what I'm 100% comfortable with in the Robinhood one. And the other ones, it's funny because I look at my Robinhood like all day long, but my other ones I'll look at once or twice a week. Sometimes I almost forget about it until they send me a text that I have options expiring that day, because they're so set it and forget it. And the ones where I have long-term holdings, I just have automatic transfers going in there a couple days a week and purchase whatever I'm down on through M1 Finance. Oh, I did pick up a few more shares of was it? Oh, Planet 13, since it was down in my mirror trade. I think he breaks them into multiple spreads because maybe you can't get so many filled. No, I could get more filled. Anything above 50 has to be done. They're done a little bit differently, but I do them relative to the like price action, and the reason I do a couple different levels as well is I want some to me that feel like free money. Like if I was to sell, like a 650 right now or a 600, I feel like that's free money, right? When I'm selling, if I sold today or next week, like at a 750 ish, I think that could be a little bit more risky, or 760, 770, those would be like a little bit more risky, and those ones I will have to manage, and I may not make profit on those, to where the 660s or 680s or 700s, those are just like free give me and has income going. And if the other ones move against me, I can use some of that profit to pay to roll out if I need to. I actually um, on my Tastyworks account, I do way less, but I do them way wider. Yeah, 670. Yeah, but I think I'm gonna move to that. Let's see. My okay. Robinhood says Tesla 650, 645 for the 1029 is 97. Is that accurate, or do the numbers get messed up at close? Yes, the numbers get messed up at close, like every single close. And I wish they would, I don't know, somehow they put warnings on every single other thing. Like the underlying might be, um, dinner might like is something that's leveraged, and then it'll give you a warning that it's leveraged. All kinds of warning, except for that. No, if it's if it's if it's something like that was completely different than it was like 2 minutes before close, then yeah. And I have it's funny, I have a spike in my Robinhood account. I show one day that I closed up 300 and something $1,000 for the day just because of some options that were mispriced. Your videos are making me confident that selling spreads under $700 is basically free money, except for the collateral you'll put it online. I mean, I yeah, I'm getting more and more confident. And you want some more confidence? I can point you towards like a couple other people too. But yeah, I think this new support, I think it's going to be like at that 760 level. I think that's what we're going to see. I mean, because that previous resistance at 700, what was that? One, two, three, four. It took 5 times to break out. Then we had a decent leg up. I don't know if it would come back down to there, but that was the previous support. So it could, I don't know, if it widens out or market comes down a bit, maybe, but good Lord, 700. $700 is easy. Like 660s to me are like, yeah, they all feel free. This whole thing feels free. It's terrible. It's that's part of the thing that bothers me too. It's like I'm playing with house money. I've withdrawn so much more, and everything's just going so well. Like, when's the surprise going to happen? Because this feels too easy at some point. I'm glad I didn't get sucked into the I don't know, whatever flavor of the week, flavor of the week stocks that people were pumping for a while. And I genuinely thought, I think they probably thought they were good. I always do weekly deep out of the money Amazon put credit spreads. Yeah, I mean, you stick to it, you're probably doing well. When did I do it? I did it right before it dropped, and then I should have rolled it out. But the thing is, I didn't know it well enough. Yeah, see, I probably sold. Yeah, I think I sold up here in this range right before it dropped down to, yeah, 33. And then I think I had 3,400 was my short strike price. So I guess I could have waited. I mean, I could have rolled them out a couple more weeks, but I honestly didn't know what to expect. I thought we'd have some bounce back, but then it just dropped even more. And by then I had no extrinsic or intrinsic value left. And I was like, well, we'll just go on to what I usually do. So what about more safe and passive spreads on Spire Qs or DIA? Those are very stable and great liquidity. I totally get what you mean about being super comfy with only Tesla. I've been doing some. I've been doing my put credit spreads, and I play SPX Iron Condors on another account. Usually a couple, 2-3 times a week. But those aren't. The reason, well, first, we can't trade the SPX on Robinhood, and the platform just isn't as nice. Like, I can't go through it quite as well, and they take more management. Like, I don't, if somebody wants to play those SPXs like I do, they're 1 day, 2 day, 3 day, stuff like that. It takes a lot more management. I don't think it's for the average person that doesn't necessarily have a lot of time to manage it, because the downside of those a lot of times are the fact that you have to sit and watch it. You have to pay attention. Those will go so far, like you can lose so quick on those, and if you don't have a stop loss that you can set, which you can't on a lot of brokerages, you can get screwed like pretty quick. So I think like just the put credit spreads, with a little bit of time on them, I think they're easier to understand, way easier to manage, and but like the Yeah, I mean, I think it's a great idea to do those. Like I did a couple of them this week on the SPY. I think 8% on one and 5% on the other, so 13%. Personally, I love Tesla because those premiums are always so juicy. So far, in my experience, I've found SPY and Tesla to be the best for credit spreads. Yeah, I like both of them. Maybe that'll be my big diversity. I mean, I guess if I'm looking at this, so this is the SPX, the purple stuff overlaid onto Tesla. I mean, minus this is like huge divergence, right? But for the most part, they really ran in parallel with each other. Not too much difference there. Although, what is this from? I guess the end of the month, this last month, we've really had divergence there too between the two. This has been a rocky month for the SPY. But overall, what I'm gonna do, at least in my Robinhood account, is probably just more of one put credit spread, open them less often, pare down my underlyings, just get it like really cleaned up. And probably never ever play. I'll probably never play Amazon or Google or Roku or anything again unless I get into that particular stock. Oh, what was the other one I got burned on? It was Netflix. That was Netflix, which I lost on when I was like trying to diversify. Of course, I got bid on all of them except for my Teslas. But I probably won't play those anymore. I'll probably limit myself to like once a week. I'll do like maybe $100 YOLO on something if it's really interesting. But I'm getting to the point where I'm just like a little bit of bored on there, and I just want to do something that's repeatable and not necessarily need to be stuck to the market like every minute it's open. I enjoy driving with music on. Something that I kind of forget too. But like it was like Friday when I kind of figured that out. Just listened to music while I was driving, and that was pretty nice. Instead of listening to every single speech, but I think it's good to listen to them. Uh, but then certain trades and things you have to pay attention. And then like if you're playing Amazon, I mean I don't know about if you just kind of chose it or you pay attention to everything with it. With Tesla, I'm super interested in. I want to know everything that's going on. Like I listened to the whole shareholders meeting live. I'm gonna take time out for that because that stuff really interests me. Where an Amazon one, I've never listened to one before. How far out do you usually get on your Tesla spreads? Um, I don't know if there's a usually. I would do them like, ideally they're 4 to 6 weeks out, just so they have plenty of room to move down if something major happens. Then there's room to roll them out if need be. Um, but so but recently, let's see, I've been rolling them out 2 to 3 weeks, and I've been rolling them out the Friday before expiration. So they were already 6 or 7 days until expiration, and then I'll roll them out to like 21. So that's probably my typical. And then when there's a big drop on Tesla, or I guess relatively, I don't know, like something like this, where I see the drop, I'll sell them closer to the money than I was up here, closer to the money with a shorter expiration. I think I think during this day, this big drop here, I think they were giving me like hundred and something dollars, and I think I did that live when I was recording it. I was like looking at the prices, and I was like, $120 for a 600. Like, yes, please, free money, thank you. Uh, so and I think it was just like a week out, or I don't know, just like a few days out. But on average, 21 days is probably where they're at. I have some that I rolled out a long time ago that are sitting in December and January. Um, let's see. Can we grab those? There's the ROBINHOOD. Like I have, see, this is like too messy, and I have put credit spreads and I have debit spreads. There we go. So we have, look at that. Like I had a debit spread out January 2023. That's crazy. But I thought this is a good deal. I paid, what do we pay for it? $1,000 for $4,000 upside that it's above 1050 in January 2023. I think that's a pretty good deal. I think that's very highly likely. I mean, it's growing at 50% a year. And if we can't get another 25% by next year, I don't, something's going on. But we've got like 35 $10 wide ones expiring January 21st. So we have those, and I think we had another big group of them somewhere. Yeah, these 675s. We opened these ones up for $3 a piece, but we still have a lot of them. Have 19 of these, 35 of those other ones. So we have a lot of them that are expiring a ways out. But these, like I rolled, I mean, this was like May. So in May, when everything was going crazy down, that's what I did. I just rolled them way out instead of taking a loss, which at that point I probably would have had to take a 300% loss on it. And my $500 collateral that I put out collected 100. I would have only had 200 of it left, so lost half of my money, not got anything, but instead we rolled them out, and now we're pretty close to collecting 100% on them. Do you do iron condors on Tesla? Sometimes, but I'm not going to anymore. I have, and just because the scariest thing to me is the upside. Like, if Tesla drops $100, I'm perfectly I'm comfortable with that. I can look at the reason why. But if for some reason I think they're going to be pretty steady right now. I don't think there's any major over the top announcement that's coming out, because like all the earnings calls, everything Elon has said has been pretty straightforward. They're, under the constraints that they are building as fast as they can. We know that. But, and then coupled with that, I know, but like I feel Tesla's even when it's hitting 800, 900 is undervalued. And I feel like someday somebody's going to wake up and realize that. And it could rocket up past $800-900 pretty quickly. And I'm just so much more fearful for that top side, and the premium isn't enough for my stress of it going up. So yes, I've done it. I probably will not do it. Every time I do it, like I guarantee if we need Tesla to go up, I'll open up some call credit spreads, or I'll sell a call against my shares. I mean, I would sell them. I had one sold at 820, and I ended up paying to close them out because I freaked out when it was hitting 800. Or even what was it, Thursday? Yeah, it was Thursday or something where it just like ripped up all of a sudden. That was a crazy rip up. That one was, where was that guy? That was this week. That's what I'm scared of. And maybe it's because I went through the other, maybe because I went through this time period here, this from 640 to 850 in such a short period of time. Like that was quick. Or even that first one when it went from 400. I mean, that was just, every day, just super far up. So where would I sell them? I don't know. Um, I think I actually got some. I actually have some lines on here. So maybe staying within my channel here, I could sell some, but it's not worth it for the extra whatever I'm going to pick up. I want to make my trading as stress free as possible, not really having to worry about it, and uh, and that way too, I'm not doing any YOLO stuff. I'm not wasting any money, and then probably move on to the next hobby here, and I tend to do that. I really do. So before this, I was all in. I started like 2 years before I started trading, all in on the Amazon FBA stuff. Put a lot of time and effort into growing that. It grew. It's self-sustaining. Put a lot of effort into trading and learning a lot about it. Um, 2 years ago, well, 2 years ago. So October 9th, 2019. I probably would not know what an iron condor was. Maybe I think that was at the point where I decided I was going to learn. So I don't think so. No iron condors. It's going to be my account, and we'll see if I can, and call me out on it if I don't do it. But that is my plan. So calls, that it was like I wrote them down like 4 or 5 different things, which were I want to sell calls on all the underlyings I don't care about, stick to put credit spreads, and just get rid of everything I don't necessarily really super care to hold. Stick to the put credit spreads, enough out of the money to where they're comfortable, and I'm confident with it. Ooh, why did my hmm, my little my little stream thing messed up? Huh? Don't tell me. Did I? Uh, I'm not actually not sure what's going on here. Well, for some reason my chat and all that stuff went away. It's kind of weird. Let's see, 1 second. Can I get to it from here? All right, there we go. Okay, at least I can find it there. I guess we've been an hour and 2 live stream days in a row. Do you guys have any other questions, or anything that you specifically want to go over today? Otherwise, I might end up here and make it a rest of our Saturday. Um, I think Tesla's thick support at 700, but the put credit spreads below 700 less premiums. What to do? That is the $1 million question, right? Yeah, it's either wait, um, or realize, like, actually do the calculation and realize, yeah, it's not fat premium, but if you can grab, a few percent every couple weeks, 5%, that's still really, really good over time. Um, I don't think we're gonna. I don't know. Um, I think we're like, it would take something pretty big, I think, to break down below the 760s again. So I have some that I've been selling at the 750s just for that premium. And we have a number of them. So you can just kind of see what I did. So we have 730s, 740s, 730s, 710s, 745s, and we have a couple 750s. So like in that case, since you if you don't want the risk, you can just pretty much like weight it. You can either do a huge spread between like whatever 750 and 680 or something like that. It depends on how much you actually have as far as collateral, or um, or kind of weight it, right? You can do five of them down at 700, 680, something like that, and then do one at 650. Do one at or 750, 760, 780, something more aggressive, and I'll do that time to time. Most of the time they work out. Do you do technical analysis before you run put credit spreads? No. All I do is I just look at price action and news. Price action, news, which I pay to on a regular basis. Um, I do. And then just take into account any upcoming known catalyst news or events. And that's pretty much it. I mean, pretty much what I just looked at right now. That's this is this is like all of my technical analysis right now for Tesla and where I think it's going to be. We even need to go back 20 days, except for that. I mean, the SPX doesn't need to really be on there, but this is pretty much all I've cared about in quite some time. Like I saw and it's been since this major wedge formed. We broke out of there. Looks like we're pretty much in a channel. Are you too busy? Oh. Pretty much in the channel, and then I look for areas of resistance and support, knowing that news can change that. But that's pretty much it. That actually is it. So nothing beyond that. And that's part of what if I shift to stuff that's or shift my account to just basically be more safe. I would like to put some more time and effort into the technical analysis and various indicators and things, which I haven't. And then also, like, with regards to technical analysis too, it's a lot different, I think, for somebody to go, okay, let's look at Amazon, and then like let's look at all their metrics and see what's going on. Where I pay attention to Tesla every single day, and like I know what the drops are correlated to, or the upsides generally are correlated to. So it's analysis is definitely pretty thick in my head. Generally, put credit spreads are a bullish strategy. Yes, sir. They are running the wheel now. I'm just running the wheel on. Well, I guess I'm running the top side of the wheel on a lot of things and running it on Tilray. That's it. Will you roll 725 put credit spreads if it goes below 730, or just accept the loss? Well, one, it would not be a loss, and it depends why. So that's like the key thing to me, because if Tesla goes to 725, if we lose $75, what would that be? Or 50, 55, $60 worth of value, I'm going to know why. And I'm going to take into consideration what that news really means for the business, whether it's just like bad news, like the NITS investigation, or something that really doesn't affect the core business, then I know that's temporary. So if it's something that's temporary, like absolutely not. I'm probably not going to roll it. I probably have time. And I'd probably let the bounce happen back up. Like there's those areas where they happen. I don't remember, like when we have this major pullback, right, from whatever 668 all the way down. I know that's like that below 600. It's pretty temporary. Like it can bumble down there a little bit, And coming into a wedge, like that was going to be temporary. Um, that drop, temporary. They're all temporary things. If it's something like, I don't know, it'd have to be catastrophic. Stuff I don't even want to say. It would just have to be catastrophic. What, like EVs are illegal now or something? I don't know. To the core business. Then I might worry about it. If Tesla comes down with the overall market, if the SPY, the Nasdaq, and everything is down a few percent a day over the course of a few weeks, then yeah. And then I'll totally roll it, and I will roll. Like comparing rolling to taking a loss, I will not take a loss. I will roll. Just period. That's how I ended up with those 55 put credit spreads in December or January. They were from wherever they were at. May, right? So February, May, when we were like at 800 and dipped down to 500, that's when I rolled them out like all that way. And it's kind of just like with the, I mean, let's see. Where's one of these empty charts? It's kind of like just with the SPY, like eventually it's going to go up. And I have way more confidence in Tesla than I do the SPY even. That's just like an over the time thing. So I know even if I get them at this crappy time right before the drop, then I can roll them out several months. And that's what I did with Tesla. I'm just like, well, I'll roll them out to here. I actually collected more premium, held on to that, used that to sell put credit spreads on the way towards when those became profitable, which now they are, where are we at now? I think those things are up. These ones here, these are up $12,000, and I gained $12,000 instead of taking a loss, and I probably got a credit when I rolled these out too. So I got paid to wait, even though I wasn't able to do stuff with that collateral during the last 9 months. Who cares? I mean, there's years and years to invest. At least I don't care. Earnings running coming up soon for Tesla. I think so. There usually is, but as we've been getting through more and more of the earnings and now shareholders meetings without any major news, I don't know. I mean, I feel like there could be more positivity afterwards than prior to, because what we went through is a couple years or like several different events where they would have the event, the earnings call or something like that, and then they would announce, oh, by the way, we're building this new vehicle, we're building this roadster, yada yada, whatever happened. And then when it started to not happen, we would get the earnings run up and then a big drop because everybody wanted to be a part of that earnings or whatever announcement was made. Then it wasn't made. That happened over several earnings reports and several events, like the new Model S. Okay, it's a Model S event and it's just the Model S and didn't drop very much. Now, if we look at, we had an event Thursday night and it only pulled back $5, $6, $7. I don't know. Just like a little bit. So we're not having that crazy expectation. So that may play into not having a huge run up prior to earnings. Although I think because some people expect a good beat, I expect a good beat too, because everybody was wrong, or the average analyst was wrong on the production and deliveries. They're probably going to be wrong on the earnings as well. I think it'll all just be positive. I don't know, and I'm super happy at this level. It's a comfortable level to where we can sell far enough out of the money to get some premium. It doesn't feel overinflated. It's not up in the 900s quite yet to where it feels scary to sell, $50, $100 out of the money. Like right now, I'm fine selling $30, $40 out of the money. I'm fine with it. Once once it has this next leg up, that'll suck and make the shares more expensive. So, I mean, I would still love to, grab another 100 shares of it. I mean, we're working on it. I think, like, what do we have in this account? We have, where is it at? I think only 200 and some. Where's it at? Oh, 208 and a half. Oh, I need to get my percentage. Hey, that's a goal. I can have 69.42% portfolio diversity of Tesla. Hey, there's a good goal. But that should be 200 shares should be enough to retire on when it's $4,100 and we just have to sell a share or so a month for living expenses. What else are we down on? UUP, inflation, 710. This might be, yeah, this is an example of one that spiked up. That was that 12:55, and then 1 o'clock, all of a sudden it went up 10 cents. Are you part of Logan's Discord group? Yeah, I think, yeah, we still have a channel or a room in there. I don't get by as much as I would like, just because life and stuff, or my own. But yeah, I think Steven and I still have a room in there, right? If I have more time, maybe I will. I don't know. I mean, there's so many people in there that I think really basic stuff can get answered pretty much by anybody. Let's see. Where is Logan's? Yep. I just haven't posted in there in a long time. That's all it's been. I mean, it's pretty cool. Like, I don't know. I think it's maybe just some kind of burnout or something. Like, there's only so much that's interesting to learn. I think I found my niche, like what I want to do pretty consistently. I know my trades, at least with Tesla. I know the company inside and out. So not a whole lot more there. And then most of like when people ask tons of questions, there's a ton of people in there just to answer them. So I've actually enjoyed. I've done some one-on-one calls with some people who are kind of newer. That's actually been more interesting to me, especially somebody just getting started with it. Because stuff I'm very comfortable with, and maybe you're super comfortable with, you can you can help new people with. Did you see a 790? You probably saw a debit spread. That's what you saw. Which one you're looking at? The 790? Where is my 790? There we go. No, you saw debit spreads. So I bought these for $340. Now they're worth $500. Which means if I would have sold them as a put credit spread, I would have gotten $660 for these. And when did I open these up? Long time ago, February. Bought these debit spreads for $300. How do you get one-on-ones with me? Just ask. Like, if there's something specific you need to go over and we can't get it done here, like, I'm happy. I'm happy with the call. Email is kind of good. Email is definitely really good. Um, yeah, like if you've done your due diligence on something, and something's not clicking, I'm more than happy to. And it's not like I have anything kind of like these. I don't have anything specific, but I'd love to help out as many people as I can. Like this was a fun learning experience for me, and sometimes even helping somebody else, it makes some of the things in my own mind click. But if you have, let's see, would there any be reason to buy a put credit spread further than 4 to 6 weeks out? Also, what makes 4 to 6 weeks optimal? Um, Yeah, I mean, you can buy them out as far as you want. Like, I will buy them out super far when I think they're a super good deal. Like, I did at the beginning of the year. I sold ones that were 8 9 months out just because, and I sold them. I sold them above, like, they were in the money when I sold them because my thesis was Tesla was going to be above $700 before the end of the year, no question in my mind. So that's when I sold a lot of those 700 690s. I opened up a lot of them like that. Um, but what makes 4 to 6 optimal is just the back testing. It's just back testing, which it may not apply necessarily to Tesla or every underlying, but in general. Um, and this is something that Tastyworks has done when they back tested it. That was the optimal time, 4 to 6 weeks out, and managing at 21 days. And by managing could be closing or rolling. But that 4 to 6, what actually happens in that 4 to 6 weeks that makes it better than, let's say, 2 weeks or 1 week. Like if you're selling 2 weeks out and then you have a week of stagnation, you haven't really gained a whole lot quite yet. Or if you're selling like let's say a week out, and then we hit Tuesday, some bad news comes out and it really moves against you, like in the money, like move against you. You don't have any recourse then because you've ran out of intrinsic and extrinsic value on the plays, and um, and then you don't have enough cash there to where it makes sense to roll them out and preserve that capital and give yourself another shot of a few weeks out, few months out. A lot of those you'll see, like if your collateral was $500 and it shows that to close it cost you $490, that means there's only $10 worth of value in that thing, and it's just not worth it at that point. I feel like 4 to 6 weeks out gives enough extrinsic value to be able to roll. If it moves against you, 100% correct, and enough time to figure it out. For the trade off of slightly more return on capital of selling weekly. Yeah, it gives you, it's basically, it's safety. It's really what it is. So could you make more money by selling everything a week out? Absolutely, 100%. You could, but if you have a major pullback, you don't, like, there's no exit. And every single trade, when you open it, there's a given probability of profit, right? Like you'll have an 80% probability of profit. And generally you'll find the credit you received is about 20% or inverse of your probability. So if you play that play 10 times, 8 times you're going to win, 2 times you're going to lose. But since you're only gaining 20%, you're pretty much break even. So what you have going for you is the ability to manage or roll. And if you don't give yourself time, then you're cutting off your arm that you actually can control the thing with. It's now you have no edge. And the ability to manage, recognize, or like even decipher what the news really means or anything like that, that's all we really have going for us. You run the main put credit spreads on Tesla. How far out do you usually go, and when do you usually roll them? I usually roll them the week before expiration. And I like to open 4 to 6 weeks out, but a lot of them have been opened up much less. It is based on recent price action. When I'm just rolling them out, I've been rolling them out about 21 days. And what else? Oh, but if we had a recent dip, I will open them up closer to the money with less time, because at that point, depending on the news again, and this is part of the game, be able to figure out exactly what that news means. If I feel like I've seen the reaction from the market relative to that news, then I've seen that down movement. And then after that, there should be a bounce back up in my mind. If it's coming down because of overall market, it's a different story. So that doesn't put me in such a comfortable position, especially like when the market's overall doing well and the individual stock drops off of what I think is a very temporary move. Then I'll sell closer. I'll sell closer to the money and a sooner expiration. Like I think last week or two, we had a couple days of drop, and that's when I sold the 730s or something. No, I sold one that was expiring last week. I think just like the beginning of the week or so, just based on we had a nice dip. I was like, cool, and the premium was so good at that point. That makes me more comfortable, and it also I guess the other thing that happens too, you have a much better risk reward to a ratio when those premiums go up. If I can get 120, or excuse me, not 100, yeah, $120, which is like, if I can get like a 30% premium to collateral ratio on something that I like the previous week or right before a big drop, I would have only gotten $60. And then that to me is a no-brainer, because initially opening up that position when the stock was doing better didn't give me a lot of reward for my risk. Like, okay, I'm gonna risk it. I'm gonna risk $500 for $30. That doesn't make sense. But when it comes down, premiums go up, and I can risk $500 for $200. Like, yeah, okay, that's worth a risk to me. And not only do I run put credit spreads in Robinhood, I run put credit spreads on all my accounts. My Tastyworks, my TD Ameritrade. I actually have some huge in my TD Ameritrade now. I have some very big leaps on there as well. Oh, why am I not selling calls against? I need to sell calls against that. Duh. I should. Some $900 calls or $1,000 calls. All right. How far out do you sell for poor man's covered calls? 2 weeks. These are a lot of what we have in here. Let's see. Apple's a poor man's covered call. Dropbox is a poor man's covered call. These are, let's see. That one might be a poor man's covered call. What else do I have? A lot of them, they expired. And since a lot of the names were down, I didn't want to sell them. But generally just a couple weeks. And I sell them. I'll sell them at a point to where if it got exercised, I'm still profitable on the long call. So I don't mind selling those with shorter expirations, as long as it's a decent amount of premium. Just because that's just all about collecting money right there. If it's a less volatile stock, then I might sell it 4 or 5 weeks out. Just really depends on how much premium you can gain, because a low moving stock is just not going to grab you that much, so you have to go out quite a ways. Oh, next week we get to sell more Tilrays. Tilray just in the dumpster. Which is fine. Eventually weed stocks will have their day, I think. Boy, compared to their spike, not very good. How far out would you place a put credit spread for SPY? I've been doing those.
Oh yeah, I've been doing those just like one DTE. If I was to do them on a regular basis, like that, I didn't want to touch them too often, I would do them that 4 to 6 weeks out. But Tuesday will open one up that expires Wednesday. Thursday will open one that expires Friday, or not one, at least 9, maybe 18. Maybe we'll double it this time. We should have a lot more in the coming weeks. I'm gonna have a lot more collateral to be able to open up some of these things as I get my some of the underlying stocks sold, and a lot of the positions are going to be closed out. Things that I can, um, yeah, use for put credit spreads or that. But I really liked what Stoner Raoul did. I mean, he's doing what, 90 of them every week, twice a week, and that's all I think about. He just has $10,000 worth of um, uses $10,000 worth of collateral, and actually he just uses $9,000 worth of it. Opens up 90. So even when I feel like I didn't get very much, like on the last set, and because I get $5 a piece, but for him that's $450, and he did that twice. I'm sure he got similar amount of premium than I did on the first one. So his first one would have been what I got. I got $7 or $8. So he got $720. Probably made $720 on Wednesday, $500 on Thursday, Friday. It means he made over $1,000 off of his $10,000 collateral, or $9,000 collateral, and he's been doing it for a few months, twice a week. That's super awesome. But I'll take that play. And by the way, those close out at 2x premium receive. So if I received, and I think, yeah, we were talking about it a little bit back and forth, but if I open it up and I receive $6 premium, I will close at $12. So whatever double that premium is. If I receive 5, I'll close at 10. If I receive 10, I'll close at 20. So whatever, just 2x that is. Next week should be pretty interesting, though. Actually, it's going to be interesting to see if we get any more news with China going on. Yeah, and if you're feeling that, let's see, have you had to close any of them yet with 2x? No, I have not. I've come very close, though. But I just started doing them a couple, was it last week? Yeah, after Stone came on. I was like, cool, I'll try it. I just loved what he was doing so much, just because it's so clean. And his account is so clean. He's like, I just do this, and then he takes the premium. He doesn't like try to build up the account as far as like, this week I did 10,000. I made 1,200, so I'm going to do 11,000 next week. He just takes that 10,000 and then sticks the money in different underlyings that he wants. It's so clean. And then once he's built up $10,000 worth of underlying that he's made from that, then he's like in a no lose situation. Tesla premiums are never 200 to 500 ratio unless it's a major dip. Tesla now, even 4 to 5 weeks out premium, is only 70 to $100, even like near the money. But I've done like at the money, a little ways out, or above the money with a big dip. Where is the money? But you're probably right. All right. November 5th. 780, 775, $178 credit. $205 credit December 17th at a 780. But this is like, so like, that's awesome right now. But I think some of them that I opened up, and of course I was just grabbing numbers out of my head. So I've had those dips where it was $50 under the money, and I opened them up at the end of the year. So it was like, yeah, I guess that's what a $300 put credit spread would look like, right? $50 in the money, $50, $60 in the money, yeah, to get a $300 credit. But I opened up some of them way out. But unless you buy at the 120, 122 dates, and those aren't too bad. Nothing wrong with that. I think it was nice for me from time to time, like when Tesla was down at $500, I would open up one randomly, like in January, December, something like that, where I'm like, again, there was in my mind, I mean, 100% is as 100% as somebody can be, that we were not closing below $700 at the end of the year. Like, it's just was not questioned. I have a spreadsheet that I put all my price targets like all along the way, which ended up pretty accurate, and gave myself a buffer on that. Um, so those were easy to sell. So if you go back to when they were 500 and you went and sold like a 660 or a 600 or something like that at the end of the year, you get a ton. And I love it. Yeah. The one thing that I love is like when we get to say this, right? We get to say 4 to 5 weeks out, premium is only 70 to $100. We we only gonna make 20% on our money 4 to 5 weeks out. Oh my God. Like, we better start OnlyFans so we can make some money. And like 20%, that's so nuts. People just like buying stock or buying like the indexes or mutual funds. Like, oh my God, if they had a 20% year, that'd be the best day ever. Be awesome. I'm up 20% in my IRA this year. Like, congratulations. And then some of that stuff I kind of have to step back and put in perspective too. When we're looking at that, when we're making only 20%, or what 70 would be, um, what is 70? That is, oh, is it 14%? Yeah, thank goodness. I was like, swear to God, I can do math. Maybe it's after looking at so many numbers. It's funny, like sometimes I'll be deep into some math and I can't add two numbers up. So 14%. Um, but like even making 5% a month, like it just doesn't take, like that's seven. What is that? I can do that one. 5% a month will take 14 months, so a year and a couple months to double your money, pretty much. 5% a month. And we're looking at 20%. 20%, you're doubling your money every 3.5 months. If you let it expire and gain the whole 20%. 14%, what does that take? 1, 2, 3, 4, 5. 5 months. And we complain about it. And literally, those are the trades. You can go make that 20% on your phone, like laying in bed, sitting on the toilet. If you have autopilot, you can do it while you're driving down the road. And imagine what that took. So like we can get 70 to $100. How many? Well, maybe not anymore, but how many people work like all damn day for 70 to $100? A lot of people. Maybe not so much more. I don't know what minimum wage is. It's probably like $15 or so. So 100 what is that? $140. So they at least work 4 hours. $20 an hour. So they at least work 4 hours for the money that you can make in a second. And then if it's far enough out of the money, you just don't care. It's kind of even more. Um, it's kind of even. Wait, it's even kind of more. At least on Tastyworks, if you get $100, they hold $400 collateral, so it's 25%. Mm. What do you mean? Oh, I see. They hold less collateral on Tastyworks for a $5 spread. I don't think they do that on my account, but I don't know. Maybe. Yeah, but that's just like nuts. That's nutty money, and that's what had me thinking about it a little bit more when some people sent me, like, I was talking to Debbie. That was like one of the emails I got. She does them. She opens them up like down in the low 500s to make like a couple percent every couple weeks or whatever. She's like, "Is that silly?" And I'm like, no, like, hedge fund managers try to beat the S&P every year at whatever the S&P is doing, their average of 10 to 12%, and you're doing 2% every couple weeks, which fits her, like, it fits her job and her risk tolerance. If your risk tolerance just isn't there, which is hard, like, it's always hard to imagine, maybe because she's female and smarter than us or something, or maybe we're just like way more aggressive with it, and we want to take our $5,000 and turn it into 50,000 and 5 million and 5 billion and be rich. Where she has less risk tolerance, but that 2% is just going to snowball over time, and she gets to be completely like zero stress selling at 530. I like, part of me is just like, no, what are you doing? Raise your strike prices. But I'm only saying that internally, where I think it's fantastic for her. Like, we all say, it depends on your risk tolerance. I think some people think they have more risk tolerance than they do. But with her, I think she knows her risk tolerance, plays the plays, and I mean, that, to me, that was just awesome. And to think it's silly to make 2%, which amounts to 4% every month. That's great. Way better than sitting in a savings account, 100%. Um, would it be possible? Makes sense to do your Tesla put credit spreads in a TD Roth account instead of Robinhood? Yep, probably. Um, let's see. The Roth is the one where um, I get confused about like the tax implications with all the different account types. So, oh, and how do I avoid the watch sell rule when it comes to taxes on Robinhood? So I don't avoid any rules. My CPA, she's the one that tells me what I should and should not do, and I mean, whatever it is, that's where I pay taxes. But the one thing that she told me, CPA told me, that's pretty interesting with traders as opposed to a lot of people, and forgive me because I don't know all the Roth IRAs, and all that stuff. But basically, she was saying, like, the purpose of most of them, like the 401s or IRAs, is you put money in there, and then later on down the road, you take it out and pay little or less taxes on it because your income's not as high, right? Like when you're super old or whatever. So the problem with traders are you guys don't stop. You just keep trading. So if you're trading and you're successful at it, you're likely just going to keep making more and more money. And by the time you're retired, like retirement age, you're probably still making more money. You're making more money after the retirement age than you are now, because now instead of having 2 years under your belt, you have 20 years or 30 years of market experience. You're probably just going to be better, more comfortable, more confident, and you're going to be making more money. You're probably never going to quit. There's no reason somebody that's like, they can be on their, like, confined to their bed and they can still trade. It's not like a normal job, where a normal job at some point we can't stock boxes at Home Depot or whatever our job is. So we put it away, and then we plan on doing no work or have little income, and then we can get it tax free. And I don't know if that's, I think on Roth IRA you can withdraw the initial capital or something for free. But at this point, like, I just have like a lot of income across the board, so I'm paying taxes kind of no matter what. And yeah, watch sell. Just when you start making any amount of money trading, and you will, like, get with the CPA and do it early. There's a lot of things you can do to help you out. You can trade. You can trade inside of an LLC, which helps legitimize it. And at which point, if you have to meet certain criteria. I did a Super Bowl video about it and went through that criteria. Maybe I'll have to like repost it during next tax season. This is kind of another tax season right now, because if you filed an extension, then you have until October 15th, I think, to file. But there are certain criteria you have to make. You have to be trading for a profit, make a certain amount of trades per day, per month. And I can't remember what all the other criteria is, but then at that point you can start writing off things like I can write off my internet stuff, my electricity bill, my mortgage, anything that could potentially be used for trading. You get to write that off against the earnings that you have from trading. But you have to also take the trader election early in the year. You can't do it like at the end of the year when you're filing your taxes. So that's the reason to do it very, very early. And like, if you're going to trade in an LLC, that needs to be done prior to. You can't get to the end of the year. And that's what happened to me at the beginning of my first year. Was I made way more money than I ever had expected on a cash flow basis. And then I got to the end of the year, and then I called her, and she does all my stuff for my Amazon business. I skipped yours. Oh man, I'll highlight it. And then I was like, I made all this money. Like, what can I do? And she's like, well, it's too late. and the IRS are big sticklers about making sure that they get their money. They want to prevent somebody who happened to buy AMC calls, made $600,000 in a short period of time, from being able to go back and go, oh yeah, by the way, I'm a trader now. So IWM put credit spreads 215, 216, expiration 12/17. Should I close when IWM gets over 228? I don't know what they're at. Oops. How far? And your expiration 12/17. What's left in them? How much do they cost to close? I don't know what your plan is. I wouldn't. I don't usually put a like, I'm gonna close it at X amount of dollars. As far as the underlying price, I would want to see a certain percentage of profit. I don't know where you opened them up at. Like, did you get 50 bucks out of each one, 30 bucks, 20 bucks? What are they sitting at now? I don't know how long ago you opened them. And then if, I don't know what those, I guess I could see how much those cost to close just by looking at Robinhood or here. Put credit spreads expiring December 17th. And they are 215, 216s. All right. Dude, you can close them for $1 right now, right? Is that right? Oh, wait, no. I have to go to table, profit and loss, contract value. Oh, they're $32 right now. Open them up at 216. Okay. 228 would give me 50%. Yep, for a while. They don't move that much, do they? Yeah, it would just whatever you're like. You have to have your own plan. I can't tell you what that percentage would be, but if 50% your goal, like close it at 50%. I can tell you a dollar amount or a percentage. I can tell you what I do. Um, that's so long. Like there's so many factors in there. If you're already up quite a bit you're already up quite a bit. I mean, I put my closing orders depending on what they are. I put them at 50%, 75%, but those are pretty arbitrary. There's no magic behind those numbers or anything. But also like what's your opportunity risk? Is there something else you want to open up? Like, do you want to close those out and open up another play? Are you super happy with them? Is your confidence high that you can sit there and let it ride? I don't know what that is for you. So those are all things that are just going to be like individual based on your trading plan. How much percentage do you pick? Wait, how much percentage do you pick your put credit spread and call spread? How much? Oh, wait, strike. So I look for like if you just want to ask me what my like ideal one would be, and I'm very happy with is getting 20% collateral or 20% premium on my collateral. Um, and oh, how do I pick my strike? Price action. I don't have a certain amount. I mean, they'll probably mostly going to be about in the 80 delta. If you want that portion, but like ideally, of course, an 80 delta is going to give you 80 delta is going to give you normally about 20% premium to collateral. So that would be the one I'm super happy with. But like also when things are stagnant, I'm happy with a little bit less because I know there's not that much volatility. I'm not able to pick up something to where I feel very confident and comfortable, but I'd use a lot of price action and news in my decision making. Way more than just hard numbers. Because if it was just hard numbers and they were a great idea and repeatable, then we could code a bot to do the exact same thing. Like, hey bot, every time Tesla does this, let's grab an 80 delta and sell the or buy the one below it or something like that. We can do it pretty mechanically. But I will get and I'll get closer to my I'll pick a strike price closer to the underlying price after we've had a big dip. Just because that premium is so good and the risk reward is more worth it to me. Did my boy? It's funny. My YouTube thing seems to be a little broken, but I'm super happy that my new my new gateway is here, and I don't think we had any like hiccups on the stream, which is finally nice. 1080p. Oh no, 1440 now. That's right. 1440p. Now it's clean. Well, all right. We've been here now for almost a couple hours. Any other questions for me? Before we get going and call it a Saturday and sell all of our positions on Monday. Excited. When do you cut losses or roll? I rarely cut losses. If it's on anything other than Tesla, I cut at 2 to 3 times the premium received. I'll do 2x on my SPX plays, or 3x on my SPX plays. That's in another account. 2x on stuff I just don't really care about too much. But on Tesla, I will roll, and I do that anytime I'm uncomfortable, and I'll do it as soon as possible. So just the quicker you do it, the more time you have, the more extrinsic value there is, the cheaper, or the more I'll be able to gain credit, because usually I'm rolling for a credit. The more credit I'll be able to receive if there's less decay. So like when Tesla was dropping the beginning of this year, I rolled those out pretty quick, and I rolled them out pretty far. And that's my plan going forward. I'll keep doing the same thing. There's no question in my mind where Tesla is going to be down the road 3-4 years in the short term. I really don't know. So that's how I play it. Is it better to roll on red days or green days? Good question. Red days. Red days, based on the new. Depends. It also depends like how far out you're rolling, etc. But a red day to me is the best, because if you're rolling on a red day, the underlying has dropped, volatility is up, you're going to get more premium. And if we look at a red day as a just kind of an overall piece of, some red days, some green days, some red days, some green days, you're going to get the optimal amount of premium. And then hopefully you see a bounce. So you can be like, oh, I'm super sad and red this day, and I rolled everything out, and I grabbed a little bit of extra premium. I took my premium and I opened up a couple more put credit spreads, and then that next day when it bounces up or volatility chills out a little bit, then you get to be super up. So I prefer red days to roll. I like them all. That's the one actually nice thing. I was thinking about that the other day, and I kind of said it in the beginning of one of my videos too, where I was like, man, it's so nice, because if it's a red day, we get to roll things out, and we get to buy our stock for cheaper. We get to get more premium. So those days are awesome. When they're kind of just so days, like sideways days, it's awesome because theta's decaying. And when they're a super green day, then those days are awesome because it's a super green day and we just made a bunch of money. So I don't know when the bad days come. How do I feel about opening up spike spreads with 2 to 3 weeks out? I don't feel any type of certain way about them, but depends like how far out of the money you're going. I mean, I think opening up spike spreads are like, that's pretty solid and super repeatable. And I was doing this for a while too, and I was opening them up at the money about a month out. I'd also do 10 days out, 10 days till expiration, some broken wing butterflies on the SPY. For a while, I'll stick to these just one day till expiration. Super easy to manage. But you have that. I mean, you have that kind of double-edged sword with 2 to 3 weeks out. You're kind of in that spot where you're going to start burning up the extrinsic value pretty soon, like 2 weeks. And because we've seen some moves, and I don't think this craziness is over. Maybe in the very short term, but I think we still have some craziness to go where the SPY can really move. That's one of the reasons I kind of keep out of it on Mondays, and that's also one of the reasons where I slowed down on on those a little bit. I think we're kind of coming to like a little bit of a point where we have China, we have debt ceiling, we have inflation, we have a few bad reports, we have the one thing I'm kind of getting a little worried about is supply chain things and just that affecting overall businesses because it's actually hit our business as well, or the company that I work for, which it had not. It hadn't hit us for this entire time, almost 2 years. Now all of a sudden it's hitting us. So I'd have to imagine across the board. I mean, of course we know about the chip shortage, but how that's going to affect things. So like if we cannot get the chips for, I don't know, furnaces or something like that, then and they're sitting all offshore, then the guys who are installing the furnaces don't have a job. The guys who are transporting the furnaces, they don't have work. The people that are buying the furnace, they don't have money to be able to like spend and put it back in the economy, and just kind of that situation snowballing a little bit. And I don't know what the maybe it's just because I haven't looked into it enough, like what the solution for all those boats floating off of the California with so much supply, like what the solution is going to be, or what that looks like, how much time that's going to take. I really don't know. But that's one thing I've been thinking about a little bit more, as it's affected our business, with not being able to get some like super basic stuff. And our stuff is well, we do import some things, but the core and what I'm seeing now that we can't get is produced in the U.S. So that's just and it's all supply chain, and there's no reason that we should have any more demand. It's just supply. So, and I guess that's all part of why 2 to 3 weeks out could be a little scary on the SPY right now. It's a I kind of have the feeling for it. I mean, I guess that's just a slight little pullback here, and we've had a couple of them. Seems like just because of those down days that we had, it seems so impactful. Good Lord. I don't know. Those drops seem so fast. So quick. And it was like, oh God, we're losing all our money. It was terrible. I don't know. Looks kind of like a downtrend to me. But if you do it, stick to it, and you have your rule, I think like the most important thing is just to have your stop loss or your plan of how you're going to manage things and sticking to it. And even if you don't win, and that slows down any potential loss, I think overall you'll either win, do well, or figure out maybe what you're doing wrong, can tweak your own rules a little bit, like, hey, maybe I need to close out at 2.5 times credit received, or 3.5 or something like that. I need to give it more breathing room, and you'll just become more educated and better at it in the long run. And I think that's it. I truly believe, like with the market, you could do anything given enough time. All right, 2 hours. I'm cutting it out. I'm gonna go move on with my Saturday. Gonna go fly some drones. That's what I think I'm gonna do for the rest of the day. Maybe think some more about Baba or do some research. It's been a nutty recovery. So thank you guys for stopping by. Hey, since I couldn't get my live stream thing to work, it's still not showing anything. So I'm glad I did it early. Give myself a thumbs up here. So you guys have a great rest of your weekend. We'll see you Monday when I'm selling all out of most of my positions, other than, of course, my Tesla stuff. Do you sometimes keep the long side of a spread? Not very often. No, Not very often. Oh, I think you asked me that on YouTube too. Yeah, or on a comment, I think. But no, not very often. The only time I'm legging in and out, the only time generally I'm legging in and out of things, or I'll leg into a debit spread from a leaps that I have. Yeah. All right. Love you guys. See you guys Monday. And next week, let's make a lot of money.